Hey, welcome everybody to the 40 Finance channel. My name is Jeff Beers. Today we're going to look ahead to some of the earnings reports that are coming out this week and look for potential buying opportunities for stocks that, in my opinion, could miss their earnings, which I would consider to be a buying opportunity. Sometimes these earnings misses aren't really as bad as analysts make them seem. In fact, you can have earning hits like Netflix just went through, but you'll have these other arbitrary metrics like subscriber count, shipments, deliveries, whatever, that analysts get down on. So at the end of the day, I just picked 5 stocks that we'll go through that I think are really riding the line on whether or not they'll hit the expectations that are up for them. And I'll let you know what I think would be a good price target if you did see the opportunity to jump in. All right, so take a quick peek at Netflix here so you can get a feel for what I'm talking about. This is a 1-month chart. Netflix was doing well heading into earnings. And then though the earnings came, and while it was a good earnings report, the stock dropped off because folks were concerned that analyst targets for Netflix subscriber count didn't come in anywhere near expected. And again, these were analyst targets. These were not anything that Netflix came out and said that they were going to hit. And it's almost humorous because when it comes down to what the analysts thought in revenue and earnings, Netflix did great. So we go to earnings history here in Yahoo. We go back to the most recent quarter, and you see analysts had a projection of $2.97. Netflix hit $3.75, almost $1 more, and that is a 26% surprise on revenue. So with Netflix doing this, you effectively lowered your PE, and then on top of it, analysts were mad about the subscriber numbers, so the stock sold off. And if we look at where things stand today, the forward PE for Netflix at 49.02, this is an annual look back in their history. You're never going to find a lower forward PE for Netflix than you will at 49.02. And the future, quite frankly, for this company, as you have probably heard me say before on this channel, it's pretty darn bright when you look at these EPS projections, $10.54 for this year, and then $13 next year. From a revenue standpoint, they're still growing double digits, and they have this whole world of international revenue that, quite frankly, they still haven't gotten exactly where they want to get in that world. So if they do unlock the formula for recurring revenue in international waters, then you could see a great growth story here. All right, first stock on the board here is Pinterest. And Pinterest is in a very interesting time because they had a nice pandemic run up as people were trapped at home, locked on their screens, so on and so forth. But you see what's really happened here year to date, and that is just like a lot of ebb and flow with this stock. If you go back to the market meltdown in early March, this was a $62 stock. Not quite profitable yet at minus 22 cents, but that is in the cards for the future. Ideally this year, Pinterest would reach an EPS for the year of 85 cents or perhaps as high as $1.16. But the real story here is, of course, the revenue growth, 48% projected for this year, 35% projected for next year. All right, so switching over to Seeking Alpha, let's see what the expectation is for Pinterest. The announced date is 4/27 after close. EPS estimate of 7 cents, revenue of $475 million, revisions, which is how many times it's changed in the last 90 days, revisions are up 13, whereas down revisions only came in once. I don't know if I said that right. I meant to say there's 13 analysts who have revised up over the last 90 days, and then only one who has revised down. Now, if we look at the past history, how often have they surprised? Well, if you throw out Q1, which was the start of the pandemic, you get into Q2, they beat by 6 cents, then 10 cents, and then another 10 cents for Q4. Now you can see this Q1, the expectation is 7 cents. In Q4, they actually hit 43 cents, but that was, of course, the holiday season. So I think the most comparable is probably going to be Q3 here. And at 13 cents, if they can hit anywhere near that, even just coming in at 10 cents, I think it's a win for Pinterest. But what does that do for the stock right now? At 83 cents projected for the year, you've got a forward PE of 90. If we just switch to price to sales, which we kind of have to do with Pinterest or else we don't have any historical valuations to go by, that would put you in forward price to sales of 18.90. Now, if we look back annually on Yahoo over the past couple years, Pinterest has traded as high as almost 30x times sales back when the market was less influenced, if you will, by COVID and interest rates and all that. You had a 10x times sales. Bottom line for me on Pinterest, if you were able to see a miss on this stock, I think that you have a buying opportunity. Honestly, at 76, they would have to beat fairly substantially, in my opinion, for it to be a buy at the current run-up of 76. But if you saw positives with maybe some sort of like Netflix situation where users were down or something like that, and that brought the stock back into the 60s again, but you still saw the momentum of revenue and EPS, then you probably have to take a look at Pinterest. A fair price for me for this stock would be something around $67, $65, somewhere in there. That would assume a forward EPS of 90 cents times a forward PE of about 75 or so. All right, next stock on the board is Visa. And Visa, as you can see on this year-to-date chart, has run up quite a bit here in spring as anticipation of consumer spending and transactions is coming through. This was a stock that, back on March 19th, it was at 205. And if you went all the way back to Jan 29th, you could have had it for 193. I think Visa has a lot of long-term catalysts going for it this year, but now I'm starting to worry that the expectation at a price of 230 might be a little too high for what they'll put on the board from an earnings standpoint. Keep in mind that travel and all that stuff, yes, it's coming back, but internationally there's still some drop-off. So it'll be an interesting one to watch. All right, taking a look at expectations here. You have $1.27 for the earnings. This is on 4/27, by the way, is when the earnings come in. Revenue at $556 billion. And very interesting, the number of analysts who have raised their revision in 90 days is only 4. Whereas 24 analysts have lowered their EPS revisions over the past 90 days. As far as surprises, Visa does a very good job of communicating where they think they'll land every quarter and every year. So they have beat by a couple cents here in these 3 quarters, and then the most recent quarter, they beat by 14 cents. It's interesting to note that the Q2 consensus of $1.27 is less than the Q2 of last year, which was $1.35. So there is a little bit of play, in there, or flexibility in terms of the world not being 100% return to normal. Now, if we look ahead to the full year consensus on where things stand, forward PE right now of 41.72, and on price to sales, forward price to sales of 21.11. Flipping back over to Yahoo to get a feel for Visa's historical forward PE. And you can see that, most of the way since at least 2018, you're in the high 20s, certainly nowhere close to the 40s. So the market is calling for a run-up on Visa, and that could very well set the stock up to drop after earnings. On the price to sales front, I believe Seeking Alpha showed about an 18 on price to sales. If you go back to just 2018, those are all kind of in line with those numbers. Yahoo has it a little bit higher, but I think that the discrepancy in earnings per share puts Visa at risk for falling. And honestly, if they miss, this stock could be right back sub 200 or right about 200. Now, I own this stock. I love this stock, and I'm not selling at all. But if you see a miss, you can expect this one to drop well below 230, I guess is the way I would put it. All right, another interesting company for this week, Ford Motor Company, reports on April 28th. And I think what's most intriguing here is the chip shortage and the possibility that it could really mess up Ford Motors' short-term earnings. And this is a stock that has, some electric vehicle prospects to it. It's very affordable for young investors at $12.32 a share. And prior to the chip shortage, there's a lot of folks, myself included, who saw some great things for Ford coming up. If you just hit this average estimate for the fiscal year of $1.19, you're talking about a forward PE in the neighborhood of 12 for this company, so certainly not overpriced. And when we look at the typical forward PE for Ford, it's coming in at about 7 or so. So if you had an earnings miss, you could make the argument that it could be a buying opportunity for Ford, especially if you're getting back down into sub-10s of forward PEs. All right, over at Seeking Alpha, EPS estimate is 21 cents, revenue of $32 billion. Revisions over the last 90 days, 4 of them up, 2 of them down. And again, this is just going to be a story of how bad has the chip shortage hurt this company. There is that chance that from an EPS standpoint, the company could actually be more profitable simply because they closed down factories and stuff that would save money. It's really hard to tell, but they are going to get grilled on how sales are looking over the next 6 to 12 months. And if you see some negativity out of Ford, then it could certainly be a buying opportunity for the long term. In my opinion, anything under $10 heading into the EV revolution in a few years is probably good. Just know that this could be a very choppy year with chips, and you're going to want to hang on to this and GM or anything that you do playing off the chip shortage and bad news. You just have to assume you're holding it for a couple, 2 or 3 years to really make your money. All right, next up is Enphase, who's reporting on April 27th. And Enphase is a super interesting stock because it's run up considerably coming out of Biden's inauguration with the hope of, green energy proliferating, certainly in America. So here's a stock that was over $200 to kick off the year. It dropped as low as 143, and it's sitting right now at 170. This is a stock I own. I believe my average price is like 180 or something like that, cost basis. And what a lot of people don't realize about an up-and-coming company like Enphase is it is actually profitable. You can see trailing 12 months EPS of 94 cents. That's a relatively high PE at 170, but the promise for the future is, of course, in the longer term. I would still argue at EPS projections of 214 for 2021 and 281 for 2022. And you're still running a little hot there. I guess that would be a forward PE of about 85. We really, as Enphase stockholders, we need them to outperform. is about what it comes down to. All right, over on Seeking Alpha, you got an EPS estimate for this quarter at 43 cents, revenue of 291 million, revisions, 12 revisions up over the last 90 days, 2 revisions down. So analysts are projecting sort of upward positive movement with Enphase. And if we look at their past several quarters, they have beat every time. They are facing a growth prospect this year. So this 43-cent EPS is up 14% from the year prior. And then you head into summer and into fall, and these numbers get pretty darn big. So this is a really big moment for Enphase, these earnings, because now from a stock perspective, you have to match these valuation markups that have sort of kind of swirled in here over the past 18 months or so. You can see that the average forward PE for Enphase way back in the day was in the 20s. Now, a lot of investors, including myself, will tell you that Enphase's technology is much more intriguing now, perhaps, than it was back in the day, and it's actually starting to reach a little bit of scale. But if you see any sort of miss or any sort of bad news coming out of Enphase, I think that the risk is more to the downside here, only because of what I've seen. Let's just take a look at a 1-month chart. So you see on the 1 month how much it has accelerated into earnings. So we've got a lot of folks excited about this earnings call. If it just is mediocre, or, God forbid that it's down a little bit, then we're probably heading back into these 140s, 150s somewhere. So if you see that activity and you've been thinking about Enphase, a forward PE of 75, if you got into the 150s, is not a bad place at all to be. And this company does have a track record of outperforming. All right, last stock here is Skyworks Solutions. And Skyworks does a lot of semiconductor chip work for manufacturers like Apple. They're into microphones and sound and things like that. This is a stock that over the past year has done very, very well. And now heading into their earnings, which are on April 29th, heading into their earnings, they're on a hot streak, right? P ratio of 31 as of today, EPS $6 a share. When we start to look at the valuation history, though, for Skyworks, forward PE of 21 today. If you go back pre-pandemic, this was a stock that was in the 12s and 13s on a forward PE perspective. So definitely running a little bit hotter. Same with trailing PE. Price to sales also up a couple degrees, if you will. And PEG ratio even, you had several times in the recent past that you could get it for under 1 on the PEG ratio. These aren't bad numbers. These aren't expensive numbers, so to speak, but just recognize that Skyworks at today's price of $200 or so is definitely trading at a higher valuation than we've seen in the past couple years. All right, taking a look at Seeking Alpha, you have EPS estimate of 235, revenue of 1.15 billion, EPS revisions up, 24 revisions up over the past 90 days, 0 on the downside. We look at what Skyworks has done on earnings calls, pretty much beat across the board, including a monster here, 336 over 209 on the consensus. So very interesting, but the comps are real now because you've got to get to 235. Last year at this time at 134. So it's definitely a test for Skyworks Solutions. You can see if they were to hit their EPS for the year, the forward PE would be at 1868. Now, if Skyworks Solutions were to disappoint in some way in earnings, I think we're definitely coming back down. There's this nice dip here at 172 in March when the rest of the market was soft. I would take that certainly for long term. I think historically you're probably closer to the 160s on this one, so that would be just the obvious buy opportunity anything under 160. But keep your eye on Skyworks. I would just say that this is a company that is really on fire. So bottom line, if you see Skyworks melt down a little bit on any sort of negative news after earnings, I would consider it a buy opportunity. Arguably 170 or below, that sweet spot is definitely under 160. All right, so bottom line here is all these stocks heading into earnings, they're under a lot of pressure, right? And the expectation is for perfection right now if you talk about the valuations of the stock market across the board. Now, we had that same thought in Q4, holiday shopping season, and in that case, most of the companies lived up to their expectations. Now we're in a weird quarter, right? Because we're reporting essentially on January, February, and March. Those historically are kind of meh months for retail and etc. So keep your eyes on these earnings reports because the companies that I featured here are technically good companies with bright futures. Some of them have brighter futures than others, right? Like Skyworks probably has a brighter future than Ford, for example. But all of them are right at a point where you can utilize a bad earnings report to potentially get in on a sale price for the stock, or worst case scenario, a stock price that's valued similar to what we've seen in the recent couple years. That's even hard to find these days. Like, we're almost forgetting about finding stocks on sale. Let's see if we can find some stocks that had the same valuation multiple that they had in 18 or 19. That's something that we could definitely see here after earnings. All right, guys, hope you like this video. Let me know who you're watching in the earnings report. Please give the video a like and subscribe if you enjoy the content. We'll see you on the next video.